Hi and Assalamualaikum. My name is Nur Aisha binti Soleh. About the history of these two companies that we choose. The first one is Hupseng. In 1950, the Kurt family sold crackers, cookies, and biscuits transported by vans around various towns based in Batu Pahat, Johor. Then they started research and development to produce the best cream crackers that we were known as ping pong cream crackers. In 1958, the ping pong name taken from the success of China being champion of the World Table Tennis Championship that year. Hupseng Ping Pong Cream Crackers became Malaysia's best cream crackers in 1977 until now. Next is Power Road. Power Road were started in 1998 by Datuk Low Chi Yen in Johor Bahru, Johor. Dato' Low Chi Yen has 70 years of experience in the food and beverage industry. Main product that Power Road produced were energy drink based on two strongest herbs that could find in Malaysia, which is Tongkat Ali and Kacip Fatimah. Moving on to the reason that we choose this company is the first one is Hupseng. Every home in Malaysia has this cap ping pong cream crackers or sugar crackers. Hub's popularity and their company that were long lasting in the market attract us. Next is Power Root. Power Root is one of the most consumed energy drink in Malaysia that will compete with international brand which is Red Bull. By using natural ingredients in their product, show that Power Root mainly focuses on consumer health.
Assalamualaikum and good day everyone. My name is Aisha Nashira binti Azman. So today I will be presenting about the liquidity ratio. First, the current ratio. For Hupseng, the current ratio increased from 2.06 in 2022 to 2.27 in 2023, which indicates stronger liquidity as the company had more assets available to pay its short-term debts. However, in 2024, the ratio dropped to 2.01, showing that its ability to cover liabilities slightly weakened. Although the ratio is still above 2, which is considered healthy, the decline may signal slower growth in assets or higher liabilities. Now, let's move on to the net working capital. For Hupseng, the net working capital was RM 68.4 million in 2022. It increased to RM 86.5 million in 2023, but then dropped to RM 18.2 million in 2024. This means that while the company had more resources to cover short-term debts in 2023, its financial cushion weakened again in 2024. For Power Root, the net working capital shows continuous growth from RM 117.1 million in 2022 to RM 172.9 million in 2023 and further up to RM 212.5 million in 2024. This steady upward trend indicates stronger financial health and greater ability to manage liabilities while still having funds available for operations. In the comparative analysis, Power Root clearly performs better than Hupseng in all 3 years. Higher net working capital means Power Root has more flexibility to meet obligations and at the same time continue running its business without liquidity stress. Next, we go to acid test ratio. For Hupseng, the ratio was 1.60 in 2022, increased to 1.83 in 2023, but declined to 1.61 in 2024. This shows that Hupseng had stronger liquidity in 2023, but in 2024, it became more dependent again on inventory to meet short-term obligations. For Power Root, the ratio started at 1.90 in 2022, dropped sharply to 1.43 in 2023, but then recovered to 1.91 in 2024. This means that although Power Root faced pressure in 2023, it successfully improved its liquidity position in 2024 by strengthening cash and receivables. From the comparative analysis, Power Root outperformed Hupseng in 2022 and 2024, while Hupseng only performed better in 2023. Overall, Power Root shows a stronger position because its 2024 recovery proved the company is capable of covering short-term liabilities without relying too much on inventory.
Now, let's proceed to activity ratio. For the first one, account receivable turnover. For Hupseng, it improved steadily from 0.42 in 2022 to 1.40 in 2024, showing better collection effort, especially with a sharp rise between 2023 and 2024. However, Power Road performed much better overall, starting at 3.80 in 2022, peaking at 4.47 in 2023, but then dropping slightly to 3.74 in 2024. This indicates strong but less consistent collection speed. When compared the Power Road and Hupseng, Power Road consistently outperformed Hupseng across all 3 years, proving greater efficiency in managing receivable. While Hupseng is improving, it still lags far behind the Power Road in credit collection management. Hupseng's average collection period improved sharply, dropping from 87 days in 2022 to just 26 days in 2024, which is there is a reduction of 61 days. This shows stronger working capital and faster conversion cycle. However, Power Road was inconsistent. It improved from 95 days in 2022 to 81 days in 2023, but then worse to 96 days in 2024. Finally, weaker collection control. Overall, Hupseng demonstrated exceptional improvement and balance, while Power Road struggled to maintain consistent cash inflows. For inventory turnover, Hupseng rose slightly from 8.01 times in 2022 to 8.54 times in 2024, showing steady improvement in inventory efficiency. On the other hand, Power Road declined from 2.31 in 2022 to 2.03 in 2024, reflect slower inventory management. Overall, Hupseng shows stronger efficiency and better management of inventory. Meanwhile, for Power Road, the company is faced challenge in maintaining performance. Hupseng's fixed asset turnover improved steadily, rising from 0.21 in 2022 to 0.67 in 2024, showing better use of asset to support sales growth. However, Power Road peaked at 3.42 in 2023 after 3.04 in 2022, but then dropped sharply to 2.49 in 2024, indicating instability of Power Road company. Although Power Road consistently outperformed Hupseng in absolute terms, Hupseng showed a clear upward trend. Meanwhile, Power Road's performance declined in the final year. In terms of total asset turnover, Hupseng shows steady growth from 0.08 in 2022 to 0.24 in 2024, with the biggest jump happened between 2023 and 2024. This reflects stronger efficiency in using asset to generate revenue year by year. For Power Road, the company showed a fluctuating trend. It rose from 0.90 in 2022 to 1.04 in 2023, but then dropped sharply to 0.83 in 2024, signaling inconsistent efficiency. When we compare these two companies, Power Road and Hupseng, Power Road remained ahead overall, but its performance was unstable. Hupseng, even though it's still lower, the company displayed a clear and consistent upward trend. It's showing gradual improvement in asset utilization.
Next, I will show you the leverage ratio for both Hupseng Sdn Berhad and Power Road Berhad. There are three types, which are debt ratio, debt to equity ratio, and equity ratio. First, debt ratio. Debt ratio is a measurement for a company's total liabilities relative to the total assets, which show the proportion of company's assets financed by debt. A high debt ratio means high financial risk, and the low debt ratio means financial stability. We see that Hupseng have higher debt ratio than Power Road in 2022 and 2024, and lower debt ratio than Power Road in 2023. This show a large portion of assets of Hupseng are funded by borrowing. Secondly, let's look at debt to equity ratio. Debt to equity ratio is a measurement for a company that compares total debt to its shareholder equity to show the proportion of debt that used to finance assets. And like debt ratio, a high value of debt to equity ratio means a high financial risk. Hupseng have higher debt to equity ratio than Power Road in 2022 and 2024, with the highest value was in 2024 with 53.3%, and the lowest value was 44.9% from Powerroot in 2022. This shows that Powerroot relies more on equity than debt to finance its operation. Lastly, let's look at equity ratio. Equity ratio is a measurement for the proportion of company's total assets financed by shareholders' equity. Compared to both leverage ratios before, the higher value of equity ratio means the lower the risk with great financial strength. It is because more assets are funded by owners' capital. Powerroot tend to have higher value compared to Hupseng in both 2022 and 2024. High equity ratio tend to attract more investors as they are confident with strong and stable financial position.
Good afternoon. Today, I'll present a financial comparison between Hupseng and Powerroot for the year 2022 to 2024 for the profitability ratio. Starting with gross profit margin, Hupseng maintained around 32%, while Powerroot was slightly higher at 36 to 37%. This shows both companies are efficient in controlling production costs, with Powerroot having a stronger edge. For operating profit margin, Hupseng stayed steady at about 11%, while Powerroot improved from 9.4% to nearly 11%. Both companies are managing operating costs well, but Hupseng kept a more consistent margin. Looking at net profit margin, Hupseng rose from 7% to just above 8%, while Powerroot climbed from 7% to over 9%. This indicates Powerroot achieved stronger overall profitability growth. In terms of return on asset, Hupseng ranged between 6% and 7.5%, while Powerroot improved from 5.7% to 8%. This shows both companies become more efficient, but Powerroot overtook Hupseng by 2024. Finally, for return on equity, Hupseng's ROE surged from 18% to 35%, showing very strong shareholder return, while Powerroot's ROE increased steadily from 7.7% to 10.5%. In conclusion, Hupseng showed stable efficiency with very high ROE, while Powerroot delivered stronger growth in profitability and asset usage. Both companies improved but in different strengths.
In the end, both of these two companies are stable from financial and revenue. The strongest growth profit goes to Hupseng as there are dividend payouts recently along the 3 years, which is 2022, 2023, and 2024. Meanwhile, Powerroot faced decrease in some years that need adapting to the post-pandemic, but their brand remains as a popular market assistance in energy drinks. Lastly, these two companies were going through market expansion and sold around the world by improved efficiency.